Yo, what's up guys, welcome back to Trade, and for this video I'll be showing you guys a 93.5% win rate 1 minute scalping strategy that involves the use of the trend magic, the 3-line strike, together with your cumulative delta volume indicator. So first of all, you'll be needing your trend magic indicator, so click on that, and for this you're going to keep everything the same except for your color. You'll make it green in color. Next up, you'll be needing your cumulative delta volume, and you keep the style and everything else as default, and your 3-line strike TTF indicator. So you can see that here is your indicators to go either long or short. So let me explain to you guys what the indicators are first. Your CDV indicator is basically your buyers and your sellers. So when it's green, it just shows that the buyers are more than the sellers and price is likely to go up. And when it's red, sellers are more than buyers, price likely to go down. And for this 3-line strike, it's basically when there is 3 candles. Let's say there's 3 candles, 1, 2, 3, and then there's a bearish candle which engulfs the previous candle here, which basically is one of the most popular candlestick patterns to show reversal, and it's very good for identifying pullbacks and following the trend. And for your trend magic, it's basically when to tell what your trend is and the direction it's going. So basically, if it's red, you technically want to go short, and if it's green, you generally want to go long. So let me show you guys the conditions to enter a long position. So first up, what you'll be needing is you'll be needing a close above the green line for a long position. So this candle has to be above the green line and the line has to be green. So in this case here, where we have a bull signal to go long here, this candle will not be valid because the candle is below the trend line. Although the trend line is green, the position has to close above. So let me give you guys a valid position, and this will be a valid position right here, where we have the bear signal, which means that we want to go short on this candle. The price of the candle closes below this trend line and the trend line is red. But however, if we look on the CDV indicator, you'll be needing it to be red as well. So basically, the first thing to look at is the signal that the candle gives. So this is a short signal. Next up, you just want to compare it with the trend line, whether it closes below the trend line and if the trend line is red. And third thing, you want to make sure that the CDV indicator is red as well. So let me find an example. And this would be a valid example right here. So let me show you guys. We have a buying signal on this candle right here, 3-line strike bull, and the price closes above the trend line and the trend line is green in color. And if you look on the CDV indicator, it is as green in color as well. So we'll enter a long position there. So let's enter on this candle. Stop loss would be right below the trend line, right here, and we'll take a 1:1. And this will be a win. So you want to look for another position, and this is a valid position, but it's kind of debatable because we have a bull signal on this candle right here, but the price barely closes above the trend line. So personally, I will avoid this position if I was real-time trading because it doesn't close properly above. But also you can enter on this candle where it closes above, but it follows the condition because the price closes above, the trend line is green in color. We have a long signal right here, and if we look on the CDV indicator, it is green in color as well. So stop loss will be right below the swing low, since the price is not that far away from trend line, so we cannot put our stop loss at the trend line. And we'll take a 1:1. And that is a valid position. Right here, we have a signal, but since price closes below the trend line, that's not valid. And here we have price closing above, but the trend line is red in color, so that's not valid as well. So if we look here, this candle is giving us a bear sign, and we have the indicator being red and the price closing below, but the CDV is green in color. So let's say if we were to take that position right here, we would have been stopped out on this candle right here. So this indicator and strategy shows us that we can avoid the bad trades as well. So let me show one more example before I start backtesting this. So here it's not valid because price is below. Here it's not valid because the trend magic is green, so you can easily filter out all the bad trades. Same thing all here, all not valid. Let's see, we don't really have anything. Now here is a valid position. You can enter on the second candle right here. So you have a 3-line strike. Price closes below. We enter on this position, but you also can enter on this position when the CDV turns red, because we have a 3-line strike here and you have the price below the trend, and the trend is red in color. So we have a stop loss right there, and we'll take a 1:1, and that will be a win. So anyways, that's how the strategy works. I'm going to be backtesting this, so let me zoom back previous data and start charting. So I'm going to go with you step by step on how I trade this strategy. So now we're just going to wait for an entry. So we have an entry right here, but the price is above the trend line, so that is not valid to go short. Here we have two signals, but in this case price is above the trend line, so you cannot go short here. Although price is above here, but the CDV is red in color. So both of these also not valid positions because price is below and above the line. So you're just gonna let trades play out, and I think we have a valid position here. Yes, we do. So our valid position will be right here. So price is above the trend line, and the trend line is green, and we have a green line on the CDV. Price will be below the swing low. The swing low is right here in this case, and we'll take a 1:1. So this trade is kind of long. Just gonna let it play out, and unfortunately we'll be stopped out here, but I think it will be a win depending on how you put your stop loss, and you can also move your stop loss to break even after that. So in case, like, let's say it goes up and it hits this level, you can put your stop loss at the break even, so make sure you don't lose so much of your profit. So we're going to have another trade, and here we have another trade right here. We enter right here because if we look at the position, we have a short signal, price closes below the line, and we have a red signal on the CDV indicator. So all four of our confluences is valid, and we'll take 1:1, and that will be a win. So we're gonna let it be have more signals. So no valid signals, still no valid signals. So this would be a valid signal, but the line is red in color, so that is not valid. Just gonna let it play out, and this would be sort of a valid signal because we have a close below the trend line, and the CDV is red in color, together with the trend line being red in color as well. So take a 1:1, and this will be a valid position. And here we have another valid position, but since the CDV is green in color, so we will not take that position. Okay, now here we have a valid position. So we have price below the trend line, and the trend line is red in color, CDV is red in color, and we have a 3-line strike bullish indication, and we'll take 1:1. Unfortunately, we'll be stopped out there. We had our stop loss at the recent swing high, which is right here. We will not get stopped out, and if you want, you can basically just choose the stop loss based on your liking. So generally I will put it at the recent swing high, because there's a highly likely chance that it will not bounce back to the upside, and you'll bounce back down and you'll follow the trend. So let's find one more last trade, and here we do not have a signal. Let's wait again. It's not a valid signal, and this is a valid signal right here. Price is above, and we have a green signal on the CDV, and the trend is green in color. Stop loss right below the recent swing low right here, and we say 1:1, and that will be a win. So yeah, that's it basically for this strategy. For this strategy, is basically you're just trying to look at the 3-line strike reversal candlestick pattern, and it's something that it can be paired with. Maybe you can use a stochastic RSI. Let's say you can implement a stochastic RSI, and you might want to wait for a crossover on the indication. Let's say right here we have a bullish sign here. You want to wait for a bull line to cross over, and indeed it crosses over on this candle here, and you can enter on the candle right after the 3-line strike bull indication. So definitely you can pair with a lot of indicators to improve your strategy, but I think without the stochastic RSI, it is good enough as well. So anyways, that is it for this video. Hope you guys enjoyed, and make sure to check out my other videos. Thank you guys for watching, and goodbye.